Hey guys, I've got a special guest today, Lior Gantz. He is the founder of wealthresearchgroup.com, and I'm partnering with him to start talking more about gold and silver miners. And mainly today, we're going to talk about the rate hikes, what's going on with gold, maybe some of how it had to do with the 70s, what went on back then, and how it kind of translates to now, but not really. Woo! So, what's up, brother? Glad to have you on.
Yeah, exciting. First time.
First time. Hey, before we get going, I was just looking at what you sent me. I'm putting this in the description. I know it's not a very professional way to show the 11 major gold catalysts, but you can look at it for yourself. It's in the description. It's important to do it now because it's not going to be around, but for like a month, you can look at it for free. And because when we're coming up on this possible gold run, we don't know when. I'm pretty sure it's going to happen soon, but it might be later. You don't want to be late. Is that right?
Yeah, for sure. Look, I treat it like a party, right? Sometimes you get to these parties early, and it's like, where are all the people? But if you get in early, you get the best spots in the house, get to see everything. People come in later; they have to, work their way in. There's lots of lines. That's how I see it. I'd rather be too early than too late, as long as the party is happening. So I don't like to show up early if there's no party. But we've seen a phenomenal year for gold, and a lot of people thought 2021 would be an incredible year for gold, and I said no. Until Jerome Powell actually does something about inflation, not talks about it, but does something, gold won't move. And sure enough, when he started to say that inflation is a problem, gold started flying. We saw gold 2000 earlier this year, briefly, but we still saw it. And I think there's so much more to come this year. We may even get to an all-time high.
So talking about gold at 2000 or even 2500 seems really, really small to me. It seems like we're going to pass that. In my head, when it starts to move, there's going to be this knee-jerk reaction of people coming out of tech stocks and running to something hard. And is that kind of what you're feeling like? There's going to be, instead of this creeping up to 21 and 22, there's going to be these massive jumps.
Well, we haven't seen the massive jumps yet. So statistically, yes, I agree that they're coming. We're early in the bull market. We need to see these $100 move days for gold. We need to see it go from 1950 to 2050 in one day. That's a move where Wall Street algorithms start to pick it up, and then they go into silver. Silver starts rushing, and then you have the tandem move. That's also something that's missing. You are not seeing silver moving yet. For silver to be at 23 an ounce right now, when gold is at 1950, that's ridiculous. It needs to be over 30 and likely over 35. So I feel like the problem we're having is that gold is still not proven to Wall Street algorithms that it's set to go to all-time highs. That's why silver is lagging. And both of these will be taken care of later this year, perhaps even in June with the June 15 meeting, which I think will be the most important Fed meeting probably since 2009.
Okay, but we're kind of fighting an uphill battle. So every time the precious metals want to move, they dump a ton of paper on it. They smash it back. So, and we're seeing it every time you know what's fixing to happen. They throw a ton of paper at it, and it makes the price go down. But we're also noticing our premiums going up because I don't think people are going to part with their precious metals at some fake paper price. Yeah. Is there anything you have to say about that?
Yeah, for sure. Look, there are two markets. There's the physical market, and then there's the paper market. It's two distinct markets. Sometimes they're at odds with really small premiums, but at times when people really want physical, there's going to be a shortage of physical. It's it's part of the dynamics of the markets. People are going to pay $10 and $15 over spot for silver, and they're going to pay $100 or $150 and $200 more for gold. because the dealers are having to deal with real world problems like supply chains, imports out, the mint could be closed, all that kind of stuff. And that doesn't happen in the COMEX. Like you say, the COMEX is all about, paper. And you can create more paper contracts. There's no supply chain logistic issues there. So I think what we're seeing, what we saw during the last 2 years, you saw a lot of demand for physical, creating this separate market for physical. There's a lot of people that will never buy paper contracts. They only want the physical. That culture, that crowd is very strong, and they will never switch to COMEX. They will simply never do it. On the other side, the big money is still, interested in GLD and SLV. GLD actually on January 24th, when Powell said, "Hey, inflation is getting away from us," and panicked Congress and the Senate on his banking committee, GLD at its largest one-day inflow in history since 2004. It's never had a bigger day. So Wall Street money is definitely flocking into gold, using the GLD. I think we're, like I said, the two things that are missing are more inflows into SLV. This is what I think is really missing, because that will drive all the speculating money into silver and into precious metals. When you see gold go into 2000, that's good. But for most people, they care about silver because that's what's affordable to them, and they've got more wealth tied to silver. So when they see silver going to 30, 31, 32, where the resistance is very small for it to go to 35 and 37 real quick, I'm talking in a matter of a week or two, then that's where the speculative money is really going to come in to this sector. And what will it take for this to happen? So in my opinion, what's missing, like I said, is more speculative money into silver. What will it take for silver to go to 30 and more? Well, the first thing you want is for these inflationary CPI numbers to start peaking. You don't want them to be month over month all the time higher. You want to see that that what Powell is saying about the 70s, where inflationary expectations became entrenched and people just assumed, hey, prices are going to go up. That's just the way it will go for the rest of my life. That's not happening right now. Inflationary expectations, according to the University of Michigan, which is the largest survey of consumers in America, they're pretty much agreeing that this has to do with supply chains, with the stimulus checks, with logistics, with things that are temporary and they take time to resolve, but they're not here to stay. So we're definitely in a different situation than the 70s. In the 70s, you didn't have used car sales go up by 100% where you can flip a used car, right? Those are things that happen because of chip shortages and whatnot. So I think for silver, what it will take is for the markets to see CPI numbers starting to flatten at whatever rate they peak out at, let's say 8%, and they start to flatten out there, because that will tell us that the Fed is about to do what's called a dovish U-turn. And a dovish U-turn is where they said, hey, we've tightened enough. It looks like the market has done for us what we intended to do. It's already done. So the markets are forward looking. We said that inflation, we're going to raise rates to 2.5%, but mortgage rates have jumped so far ahead of us. Interest rates for treasuries have jumped so far ahead of us. The market has already corrected so much more than we anticipated. Therefore, the wealth effect is gone. People are going to come back to the workforce. They're going to stop being on the sidelines. And we feel like we've tightened enough. Whenever the Fed says that, that's going to trigger so much money into precious metals, because what they're basically saying is we've done enough to tighten. Now it's time to start easing again. And that's exactly what the precious metal community needs. I think we're only months away from that. In June, I think that they'll say that they've started to bend the corner on inflation, that it's starting to look better. And over the summer, it will start to look even better. come midterms, the last thing the Fed will want is to be a painful subject to talk about. They won't want neither the Republicans or the Democrats to point fingers at the Fed. They'll want to be out of the picture when all this political theater happens. So I think that they'll start sugarcoating everything in the second half of the year. Start saying, hey, the economy looks good here. Interest rates look, we have a balance here in the workforce. It doesn't look too tight like it used to do. Look, I think that that's why they want to front load everything right now. That's when they want to do the 50 rate hike, the 50 basis point hikes now in May and June, so that they can get out of the picture in the second half of the year when politics comes in. That's my opinion. That's why I think the second half of the year, starting September, is when you'll see the huge rally in gold and silver. Gold to all-time highs, silver probably towards the 30. And then if we really get strong buying in silver, that baby is going to 35 and 37 this year.
Well, we've got a long ways to go on the gold to silver ratio.
Oh, yeah.
We're high 70s. We might be close to 80 now. I'm not sure, but it is a buying opportunity for sure. And these miners are so cheap, guys. Gold and silver miners, I got in. You want to talk about early. I'm the poster child for being early, but I understand the narrative. I'd rather be early than late. In the next conversation, I'd like to maybe talk about some food prices and how that's going to affect precious metals and kind of where we go from here as we approach the Thunderdome. Because in my opinion, we're coming into the Thunderdome like this, and when we get down here, precious metals do good, and then it's like this, and everybody that holds them and mining stocks are going to really do good.
I put together a special report for your viewers in case they want to see this full economic outlook for 2022 with all the charts and everything like that. So they can go to wealthresearchgroup.com/2022 or 2022. And they can also go to the special reports we collaborated on, which is wealthresearchgroup.com/fitness. Like you said, where I put together the 11 catalysts on why I think gold is going to all-time highs this year.
Go see it in the description below. Go click on it, sign up, and go all the way through it twice because you don't want to miss what's coming. Thanks for coming on, brother.
Thank you.